Markets stage a good bounce back from the day's low after a start in the morning, which looked like a repeat of yesterday's very weak session. Nifty around 150 points off the day's low. Mid-cap index almost in the green. Small-cap index, which broke the 200-day moving average, also stages a recovery.
The DGCA cuts Indigo flight schedules by 5% as airline struggles to normalize operations after mass cancellations. IIASS Hital Dalal says that the board of the airline has a lot to answer for. Now, the Indigo stock trades flat after plunging 1,000 rupees in the last 7 trading sessions.
US President Donald Trump singles out Indian rice as hurting American farmers. Trump says India should not be dumping rice into the US market, warns of tariffs. This is even as a US trade delegation is to visit India tomorrow. The Indian Rice Exporters Association tells CNBC-TV18 that the market for Indian rice in the US remains strong despite higher tariffs.
Hello, good afternoon. You tuned into Halftime Report on CNBC-TV18. We're coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Ekta Batra as well. Ekta, you're clearly cheering for that green coming on the screen. At least we're seeing that recovery from the day's lowest point. Advance decline ratio improving from the start of the day. So no complaining on that front, though portfolios have been bleeding for a while. But today, at least some bit of a recovery. We'll keep an eye out on the Nifty volatility that we may see because of the expiry as well.
Well, yes. Hi, Vinny. Absolutely. You know, the markets have recovered from the day's lows. So that's the big positive that we've seen come through. Remember that the Nifty did hit an intraday lower from 25,728. So we've recovered from those levels. The broader markets are faring better in today's trading session. So let's see whether that momentum continues. But we do have the mid caps as well as the small cap index, which was reeling under pressure in yesterday's trading session, seeing some amount of momentum build up in today's trade. The advance decline ratio also flat, so let's see whether that momentum continues and whether there's any sort of significant crisscross which takes place on the advances and the declines. But as you can see, the momentum did change during the trading session as the declines, as the advances are now outpacing declines. But let's talk about the markets. Let's talk about all of the stocks which are probably moving at this time. Maybe we can get to Vivek in just a bit. He's going to tell us about the buzzing stocks. But before that, let's surprise you of a couple of stocks which are in focus in today's trading session. So we have the Nifty, like I mentioned, which is down around 86 odd points. But if you look at the frontline indices, we have stocks such as Asian Paints, which is down around 3.7%, is the top loser on the Nifty today. We have Hero Moto, which is down around 2.7%. And as the show goes on, we're going to be discussing Hero Moto and the reason for the weakness on that one. And a couple of the IT stocks are seeing pressure today. So HCL Tech, TCS, a couple of these are in the red. But let's get to Vivek now. He's going to give us a picture of all of the buzzing stocks in today's trading session, what we should be looking at in the broader markets. Vivek.
Well, thank you so much for that. You know, much more cheerful looking screen. It's green, especially after the kind of sell-off that we saw yesterday and in the first hour of the session today. It's been a very sharp recovery. And like you saw, the advance decline ratio turning in favor of the advances and turning quite decisively, especially in the last half hour or so. In terms of individual stocks, you know, some of the stocks that took a beating over the last few trading sessions have made a bit of a comeback. Change Technology, a very sharp recovery post the recent sell-off. A couple of sales notes from global MNCs highlighting that maybe the worst may be behind in terms of the share price performance. The other set of stocks that saw a significant beating was the entire Realty pack. And today, most of them have made a bit of a comeback. Oberoi Realty, Godrej Properties up almost 3%. Mahindra Lifespace doing quite well as well in the session today. The mid-cap private banks, so, you know, remember, was under significant pressure, but most of these names have made a bit of a comeback. Bandhan Bank, Federal, IDFC First Bank, all of these stocks are recouping some of the losses you've seen since Friday. Eris Life Sciences, one particular name we don't discuss too often, but as far as the broader end of the markets are concerned, on the NSE 500 index, this particular stock higher quite significantly. And L&T Finance, again, this particular stock has been quite volatile, but this particular stock amongst one of the top F&O gainers in the session. On the other hand, quite a few laggards as well, but much lower compared to what we saw yesterday. Hero Motorcorp, UBS has flagged off market share concerns in the first week of December. LT Foods, you know, you've seen commentary coming in from US President in terms of worries and tariffs that may be applied as far as Indian rice exports are concerned. Back of that particular stock lower by over 3%. Coforge, you actually saw quite a few notes coming out after the company held an analyst meet. Now, despite that particular stock was down over 3.5%. And ITC Hotels, one of the stocks from the broad end of the market, under a bit of pressure on pretty high volumes as well in today's trading session.
Okay, thank you so much for that, Vivek. All those were the stocks that were moving around in the trading session. But let's move on and focus on the hiring picture. What's happening there? We had Naukri JobSpeaks data for the month of November 2025, where we saw white-collar hiring that was holding steady at 6 to 7%. Hospitality, travel, that led to a sharp pickup in terms of growth over there in those segments, 40% growth there. Now, to discuss more in terms of the job data that's coming in, the hiring trends that we are seeing, we have Pawan Goyal, Chief Business Officer at Naukri, joining us to speak with us about that. Pawan, good afternoon. Thank you so much for joining us on the show. Before we break down in terms of the November data, let's just talk about the broader outlook, because globally it said that the layoffs announcements that have come in 2025, 1.1 million this year, that's the most that one has seen since 2020. Any concerns on that front coming in the hiring trend that we are seeing here, or any layoffs? How are you seeing this situation right now?
So from our vantage point, calendar year 24 was probably the worst. If you look at the overall index for calendar year 24, it was flattish. However, calendar year 25, it's been a consistent 6 to 7% kind of growth. For the year, if you average it out across all the months, there's some fluctuations. We are holding steady. And there's nothing in our data that is in line with some of the talks of layoffs globally. I think the Indian economy, the white-collar market, has been fairly resilient. And we are seeing that 6 to 7% sustain. Now, some of the things which we've seen happen, the white-collar market, hiring market was over-indexed on IT. I think we've seen that diversification happen, and a lot of the growth, while IT remained stable, flattish year on year, there's growth in non-IT sectors. Some of that which you called out, travel, tourism, hospitality, has been a star consistently throughout the year. But there are other sectors we can talk about if we go. But clearly that diversification beyond IT has held India in good stead.
Okay. So, Mr. Goyal, if you could just narrow down in terms of the trends which are non-IT, which are the segments which are seeing the maximum amount of growth in terms of employment, and are you expecting it to sustain going into next year?
So let me first talk about where we are seeing the growth. So growth has been clearly, hospitality is been in double digits throughout the various quarters. Real estate, education, insurance, by and large, has been in double digits, though we did see some slowdown in October and November, but it also has remained a consistent growth driver. Oil and natural gas was a good growth driver, but it's subdued in the last October and November. So if I were to pick the top three, it's travel, tourism, hospitality, real estate, and education. Those are the ones which are driving growth.
Travel, tourism, hospitality, education, that's all been driving the growth. Pawan, you said diversification is something that helped India, apart from IT, just because we were more diversified to survive the situation that was going on globally. But now, when you're looking at the IT hiring trends, at least in November, very good growth, 14% there. Before, previously, it has been very muted. Last 6 months, 7 months, we could say there was nothing exciting there. Are you seeing a pickup coming in IT hiring? Also, what sort of hiring is happening there? Is it more in terms of the freshers, or are there senior people coming in?
Okay.
So I think it's October and November are usually impacted by festivals. So we don't look at each month on a standalone basis. So if you look at October plus November together, where the festival impacts on year gets then
hold that thought, because we do have the aviation minister who's speaking on the Indigo crisis. So let's just cut across.
Without any additional charges, we are monitoring each and every case of baggage handling over and ensuring that communication with passengers is both timely and dignified. As informed by Indigo, process of refunds, baggage handling are over in its final stages. Our 24/7 control room continues to assist passengers directly whenever needed. Honorable Speaker, sir, going forward, the government is determined to build a more robust and competitive aviation ecosystem. Through our policies, we are encouraging more new airlines to start and operate in India, ensuring fair access to airport capacity and eliminating any possibility of duopoly, controlling connectivity and pricing in our skies. More airlines mean more choice, more affordability, and more resilience for the passengers. In the last 1 decade, Indian aviation has evolved to become more inclusive. India has emerged as the world's fastest growing aviation market with year-on-year passenger growth of around 12%. India is already third biggest domestic aviation market with a huge potential for future growth. And the policies of the government will ensure that this growth trajectory is kept intact. To summarize, operations are stabilizing fast, safety remains fully in force, Indigo is being held accountable, passengers' convenience and dignity are being protected, and long-term measures are underway to make India's aviation sector stronger and more passenger-centric. The government will remain fully vigilant until normalcy is achieved and will continue to ensure that every passenger in India travels safely, comfortably, and with the respect they deserve. Thank you, Honorable Speaker, sir.
Okay, all right. So that's the aviation minister talking in Parliament and assuring that, there are long-term measures underway in order to expand the aviation market in India. And when it comes to Indigo, DGCA has issued a show-cause notice to Indigo. Remember that there were crew rostering issues and the flight operations are now stabilizing. So that's the word coming in from the aviation minister.
Absolutely important update there, right? Right now, everyone's keeping an eye out on this one, so it's key to watch out for that. But let's go across to Pawan again. Pawan, your thoughts in terms of the IT hiring trends as of now?
Yeah, so as I was saying, if you look at October to November together, IT hiring is flat still. So I'm not comfortable saying that IT hiring growth is back yet.
Okay.
However, if you look at certain roles, AI and ML, data engineering, they are growing very significantly. It's the growth in AI just continues to accelerate. Right now, it's in the north of 50%. So demand for AI is sustained and it's significant growth there. So that's what I would say on IT. Now, related to AI, there's one more thing which I want to call out. Often people believe that BPO and IT-enabled services, that's where we'll see a lot of job impact. But we continue to see high double-digit growth, 18-20% growth sustained in BPO ITS for several quarters. Okay, so that's a surprising one because that's one people typically expect will first get impacted by AI, and we're not seeing that happen quite yet.
Okay. All right, Mr. Goyal, we're going to leave it on that note. Thanks very much for joining in and speaking about the hiring trends. Well, we need to take a break or we need to take a break. We'll connect with Devang Mehta, who'll join in on the markets once we're back. Stay tuned.
"26 years of CNBC-TV18.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Talking about specific stocks and the aviation space, we have SpiceJet, which is showing good amount of traction today. So that stock is up around 7% at this point in time, just about at around 34, 35 odd rupees. Remember, it is still quite a distance from its 52-week high of around 62 odd rupees. But nonetheless, that stock is in focus in today's trade. And even Keynes Technology, after that big drubbing that it's received in the past couple of trading sessions in the past week odd, We're seeing Keynes Technology gain around 8% so there's some amount of buying which is coming in at lower levels. Again, if you look at this stock, huge distance from its 52-week high, which stands at around 7,824 odd rupees. Let's in fact talk about the markets, the broader markets, and this distance that a lot of the portfolios are facing in terms of the compared highs that they've seen earlier. We have Devang Mehta, who's the Deputy MD and CIO Equity NDPMS, that's Spark Private Wealth Management, joining in. Devang, hi, welcome to the show. Well, that is the key question that, we've seen the markets go to all-time highs, but portfolios, individual portfolios are still seeing a lot of pain because of the kind of individual stock performance. Tell us what you are telling your clients when it comes to this.
Thanks, Ekta, for having me on the show, and wish all of you at CNBC TV18 a very happy 26th anniversary. Always a pleasure to be on CNBC TV18. Yes, very importantly, there is a huge disconnect right now between the front line or the headline indices, and I think a lot of things have been written about it. But I think when you do a bit of a deep dive, and then you explain to all the viewers or all the clients that what is happening right now. I think such a polarization, ideally, I think over the last 15, 20 years, we have never seen, except for just before COVID times, where you saw around 1 dozen or 2 dozen stocks only doing well. Right now, the data point suggests that we did this couple of times in the last 10, 15 days. And yesterday, if you look at the market, the last couple of days, when you look at the markets, it was like whether the broader market is at a lower circuit and the larger indices are still keeping on doing well, or rather falling less. I think the data which we took out, roughly around 1,500 stocks which are above 1,000 crore. There are around 88% stocks which are down more than 10%. More than 20% is around 70%. More than 25% down is around 57%, and more than 40%. Look at this, down by more than 40% is 22% of the stocks, and to be precise, 329 stocks above in 1,500 stocks ka pool is down by roughly around more than 40%. The median fall is 28%. So that's why I'm just trying to sort of say that the market picture is actually showing a bit of, if I put a number to it, today if markets are at 26,000, which is very close to the all-time highs, but the broader market shows the index to be roughly around 19,500 to 20,000. Just an empirical evidence. I'm not trying to super guess. But yes, now coming to what should be done, what are the action points, right? This is all information, this is all knowledge. But now what to do? I think probably the macros have started to improve. The last 4-5 months have seen Indian macros, right, from GDP to inflation to rate cuts. I think most of the things are auguring quite positive. Market is a slave of earnings. At the expense of being repetitive, I say that this time around the earnings were supposed to be bad, but it was not as bad. We are somewhere very close to the beginning of the end of downgrades, and I think upgrades should start probably from the next quarter onwards. A lot of mid and small cap companies came up with good set of numbers, but the conspiracy theories maybe they were a little expensive in hindsight. Probably not, but yes, this type of corrections always sort of will deter people from either going out of the market. But my sense that if you just keep the faith during such times, and I'm seeing a lot of capitulation happening due to maybe margin funding, due to whatever factors. I think a lot of sell-off in mid and small caps. My advice at this point will be either stay put, or probably if you have more capital put in, maybe stagger it over the next couple of months. Nobody knows what's happening in the shorter term. But I think somebody here for the next 1.5, 2 years, 3 years, it's a very good opportunity in adversity.
Absolutely, a very good opportunity if you're here for the long term. Short term, maybe some volatility, something that we could see on that front. Devang, good afternoon. What are you keeping an eye out on then in the mid and small cap? Anything that you're looking at from the long term point of view with sectors? Also, EMS as a play, given that, so much has happened with Keynes. We've seen the other EMS names also see a correction in the recent time. Today, Keynes is surely buzzing away in trade after that correction. But anything that you're looking as an opportunity there?
Yeah, we are probably looking at a lot of opportunities. Mid, small cap always sort of interest us when there are great businesses, there are great themes to be played around. And I always made this point that while you participate in Sensex and Nifty companies, there are usual banks or usual oil and gas or usual FMCG and IT. There are a lot of sectors which are still not participating in India's growth and are part of the headline indices. So I'm trying to say that there are in the broader markets, a lot of companies below 1 lakh crore. And I think most of the companies in India, except the top 100 companies, are almost below 1 lakh crore. So the sweet spot is maybe anywhere between, say, 5,000, 10,000 crore to 1 lakh crore. A lot of opportunities available, particularly on the sectors and themes. We have generally been playing around three themes, and I've been a bit repetitive here. We like discretionary consumption post what has happened to not only GST, but I think good monsoons. Also, I think a little bit of urban consumption coming back to the fore via sales of four-wheelers, via sales of even two-wheelers. I think generally the festive season has been good. So a bit of discretionary consumption, India moving up the curve, the aspirational Indian going up the curve. What was luxury earlier is now becoming necessity. So one part is your discretionary consumption. You can play it via hotels. You can play it via probably travel themes, not to mention the current themes, what's going on in the market, but possibly one theme is this. The second theme is always, we have mentioned that capex, and I know that capex is right now the word which a lot of people would start saying that whether we should explore here. Yes, a lot of these companies have corrected big time. The numbers were good. The operating efficiencies have come to the fore. These companies have very good order books. So power automation as a space, HVDC as a space, a lot of engineering slash manufacturing companies have seen correction because the flavor of the market changed a little bit. I think these are again opportunities. And the third segment is financials. And financials, by financials, yes, certain banks, but more so some NBFCs or companies in the financialization space, some depositories or financial intermediaries type of companies. I think this is the pool where one should probably construct portfolio, which is more domestic centric rather than export facing. And I don't think there should be any reason probably this type of portfolio why it will not do well over the next 2-3 years. I think enough and more chances to sort of create wealth in these sectors.
Okay, all right. Devang, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us all of your perspective on the markets. We need to take a short break, but up next, Ajit Mishra of Realty Broking will join in with his trading calls on the other side. So stay tuned. Our market coverage is going to continue.
26 years of CNBC-TV18.
Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty 25,910. So yes, a good recovery from the day's point. Almost near the day's highest point is what the Nifty is trading at. Pull up the Nifty mid-cap because that's moved to the green side as well. When we started the show, it was still trading around that red mark. Now it's moved in the green as well. 0.3 to 0.4% of gain. That's the Nifty mid-cap at the day's highest point as well. But let's go across to Manisha, who's here to take us through a conversation that's happening on the commodities front. Manisha, over to you.
Thank you for that, Winnie. And joining us for that segment is Arjun Sani, he's director at Arsan Group. Arjun, hi, thank you so much for joining in. And we've all woken up to that statement that came in from the US President and Secretary Bessent talking about Indian rice, and perhaps there could be more tariffs, and dumping as a word was used there as well. Wanted to understand with you, first of all, we do understand with the kind of exports that we do to US is more basmati, not so much non-basmati. And basmati is something that you basically can't dump because US doesn't grow that.
Yes. Hi, Nisha. So basically, it is a very big market for India. Being basmati is 270,000 metric tons were exported last year, compared to non-basmati, where 60,000 metric tons were exported to the US. For the Indian markets, it's the fourth biggest destination. And for the non-basmati variant, it's the 24th biggest destination. But being said, all of that being said, it's a homogeneous product. Food, rice, these are all staples. The aroma, the quality. It's not being imported because we want to export rice, we want to dump rice. It's being exported because the Indian consumers, the consumers from the subcontinent living in the United States are all wanting to consume Indian rice. It's not like, they are choosing this because of a price parity. It's only because of the flavor and the aroma that they're choosing Indian rice, and basically because of the ethnic diaspora. So all of that being said, Trump's statement, Mr. Trump's statement comes from a lot of frustration because initially the tariffs were at 50%, and we were still seeing a lot of Indian rice being signed, contracts being signed back to back because of this. So let's see how the market turns, but we don't see a major shift in demand.
Arjun, I was talking to various other rice players and exporters as well, and they said it's at 50% and we have been able to export well. Even if you make it 70 and 75%, the exports perhaps wouldn't see any other impact as well. Would you say the same?
100%. So Indian markets are not going to, in fact, what's going to happen is, assume the tariffs do increase. It's going to be that these tariffs, the increased tariffs are going to be passed on to the consumers living in the states. So it's not like the contracts are going to be affected, the demand is going to be affected. Because assume the tariffs do go up by 10 or 20 or whatever, even if it goes up by 1% or 20%, it's not like that price is going to affect the consumer in America and they're going to import less rice or import less Indian rice. They're still going to consume Indian rice because that's what they've grown up eating. It's expatriates from from the Middle East, Iran, India, Iran, Iraq, Saudi Arabia, people from the Indian subcontinent, people from Bangladesh, Pakistan. They're all going to continue to import basmati rice and non-basmati variants. And please be noted that the non-basmati variants going from India are like idli rice. They're very specialty variants, which are not going to be produced anywhere else. So I don't see a change in demand at all.
Arjun, what are the other markets that India is working with right now? Because we do understand when you look at the last couple of years, the Indian rice exports have just about continued to rise up. In 2023-24, the rice exports were to the tune of 16 million tons. 24-25 was 19 million tons. 25-26, the estimates are 23.4 million tons. So we've seen that number continue to increase. US being US on what we are sending them. What are the other major markets that India is looking at right now?
So the other major, firstly, let's not rule out that the markets are going to be affected. Secondly, India's rice basket, we are the largest exporters of rice in the world currently. So India's rice, the market for the Indian rice exporters is very diverse. We have the entire Middle East. We have more and more varieties going into the Middle East. And we see a major surge this year, primarily because of a bumper paddy in both basmati and non-basmati varieties. So nothing is going to happen to the prices. Nothing is going to happen to the demand. It's only going to surge, whether it's US and whether it's the Middle East. So it's not like anything is, we are looking at other options. We're going to continue to grow. In fact, an increase in tariff doesn't really affect the Indian stock.
Arjun, what is your sense on prices as well, the global rice prices and the Indian for that matter?
The global rice prices currently on average, there are various varieties of basmati varieties. So the prices vary, but on average, let's assume $950 per ton. So we are assuming the prices are going to be around that level and it's going to continue to remain around that level. Assume there is a tariff, it's not going to affect the Indian prices. It's not that the Indian FOB prices are going to ship at a lower prices. Contracts are going to be revised. None of that will happen because even the exporters here and even the importers out there know that the demand is going to be stable. Like I'm saying, it's a homogeneous product. It's a staple. You can't really replace a staple. The aroma, the quality, you've grown up eating a certain kind of a staple. Sure. You cannot change that. So we don't really see a change in price.
Okay, so no change in price and you can't really change a staple that you have. Thank you, Manisha, for joining in and taking us through that conversation. Well, for the markets, however, it is much better in terms of a screen right now. We have the mid-cap index, which is now up around 0.3%. So at the high point of the day, there's a complete reversal in sentiment which has taken place for the markets. And as you can see, the Nifty also is at around 25,000, almost 25,900 as we speak. Remember that the low for today stood at around 25,728. So there has been some amount of buying which has taken place at lower levels. We have the mid-cap index also doing well at this point. Advance decline ratio is gaining ground, so on the advancing side as compared to the declines. We'll take a short break, but on the other side, we'll get you more on markets. We'll get talking about Hero Moto. That stock is under pressure from the Nifty. Stay tuned for that.
"26 years of CNBC-TV18.
Welcome back. Well, let's get talking about specific stocks. We have Hero Moto, which is in focus. It's under pressure in today's trading session. brokerage firms sound caution over the falling market share for the company. Let's go across to Sudarshan for more details on this particular stock. Sudarshan, what are you picking up?
So after having a good 2 to 3 months on the back of healthy festive season and the strong demand post GST rate cut, it seems that Hero MotoCorp may lose market share in the month of December. As per the brokerage firm UBS, in the first week of December, Hero MotoCorp's retail market share in the domestic market has come down to 19% versus 35% that company had seen in the month of November 2025. Also, its market share has fallen in the last 2 weeks as well. It has fallen to 29% versus 35% that it had seen in the same period last month. If you take a look at the stock performance, it has been one of the top outperformers amongst all the two-wheeler companies in 2025. Stock recently hit record high. It has gained as much as 50% in 2025, and majority of those gains in the stock price came after 15th August of 2025. Remember, that was the day when PM Modi had announced GST rate cut, and following that, this stock along with other two-wheeler names had seen a huge surge, but Hero MotoCorp was the biggest outperformer. We'll have to see how the next few months pan out for Hero MotoCorp, but historically also after festive season, Hero MotoCorp does lose a bit of market share.
Okay, Sudarshan, thank you so much for that. We have some update that's just come in from Keynes Technology as well. They're clarifying on the money control report of change in the company's auditor. What they're saying is that no such decision to change the statutory auditor is under consideration as of now. That is the update that we have coming in. That's at the bottom of the screens for you all. Keep an eye on that. The stock is obviously managing to hold on to gains of 9% in today's trading session, but do not forget we've seen that sharp correction coming in the last few days as well. So last whole week also we've seen that pressure there, and Keynes Technology today finally seeing that uptick there.
Yes, absolutely. I mean, if the stock itself has fallen around 25% this month, it's lost over 40% of its market cap this year. So seeing some amount of gains at this point in time. But as of now, there is no such decision for the company to change the auditors, is what Keynes Technology is saying. We'll take a short break, get you more stocks in focus on the other side. Stay tuned.
26 years of CNBC-TV18.
Welcome back to Halftime Report on CNBC-TV18. And markets' recent fall looks like a year-end selling by some investors. That's the word coming in from Samir Arora of Helios Capital. Listen in to what more he had to say.
Right now, it looks like somebody is giving up on India in terms of selling. I guess I would call it indiscriminately. This looks more like dumping. Now, many people say that some of the PMSs, which were exclusively or mostly into small cap stocks, are shutting because they have been doing badly for 1 or 2 years or 2-3 years. Not sure what the story is. But in general, today doesn't look like a day from which you should draw a conclusion that somebody is seriously looking at it and has decided after when the year is about to end that this is the time to sell.
"26 years of CNBC-TV18.
Welcome back. Well, for the markets, we've just got the mid-cap index, which is flitting between red and green. So we've dipped a little bit for the mid-cap index. The Nifty is just about holding at around 25,850 plus. So those levels are still holding. But just want to point out a couple of stocks which managing to hold up from the broader market. So Solara Active should come up for you. Solara Active is doing quite well. Not great in terms of volumes, but nonetheless, price action is quite significant on that counter. It's up around 12% at this point, over 600 odd rupees for that counter. And we have Newland Labs, which is doing well. In fact, it's done well this entire year. That stock has gained around 25% and is currently up around 6 odd percent as we speak. Again, not great in terms of volumes, but price action on both these counters. We'll wrap up on the show on that note on Halftime Report. But stay tuned, Business Lunch after a short break.
26 years of CNBC TV